Good afternoon. Welcome to Daily Currency Update from the Currency Desk. Yesterday, we had strong appreciation in the value of US dollar, and this appreciation was in line with the strengthening of US dollar against the global peers. That is, we also witnessed the euro strengthening against the US dollar, and alongside also we had a weak stock markets yesterday, and as we saw the Nifty and the Sensex fall, this similar movement was also replicated by the fact that the US dollar was increasing against the Indian rupee. Today we had a slightly strong opening for the Indian rupee, but at the same time this was negated by the RBI policy. The RBI has kept key policy rates unchanged at their respective levels, but at the same time the CRR rate has been cut by 25 basis points. There was strong hope from the markets, especially from the banking industry, that there would be a policy rate cut, but since that was not the outcome of the RBI meeting, we saw a strong rise in the US dollar by almost 20 to 30 paise. The RBI has also chosen to ignore the finance ministry's plea to cut the interest rates. RBI has strongly stated that currently the inflation expectations have been revised upside, and similarly the deficit of trade would also be on the upside. So based on these key factors, RBI has decided to keep policy rates unchanged. But all in all, the balance between growth and inflation has to be met. But since today's meeting was disappointing, we could expect the bullish trend in US dollar to continue. But yes, currently the strong resistance level for US dollar is at 54.30, and if the rate crosses above 54.30, only then it would be advisable to initiate a buy position. In terms of euro, we have the uncertainty continuously increasing. In Spain and Greece especially, we had the Spanish and the Italian bond yields increase mildly. We have the German unemployment data and the Spanish GDP data today, which is due. So if these data come out positive, we could see some upside movement in the euro or covering off some losses from yesterday. We, for a brief moment, saw the euro fall below 1.29 levels, but again the level of 1.29 is sustaining for the euro against the dollar. Similarly, we have a few regions in Spain and Italy actually threatening to leave their respective countries and start their own sovereign countries. So all in all, this is creating some political uncertainty there, which would again impact the overall uncertainty in the European Union. Currently, keeping in mind the weakness in the Indian rupee, we recommend a buy in the euro INR, but yes, again that would be with a strict stop loss of 69.60 levels. This is also keeping in mind that we have the consumer income and spending data from US, which was much stronger, and this would keep the dollar strong against all the major currencies. In terms of pound, we had the UK GDP data for Q3 coming in much better than expected. So based on this, we have seen some strength holding in the pound. But yes, yesterday we had a statement by the Bank of England Deputy Governor stating that though the QE3 GDP, the Q3 GDP data was better, but the same thing could not be expected from Q4. So we could see some slowdown in the future in terms of the pound data. But yes, at the same time we can expect the pound to perform better than euro. So all in all, if we expect the euro to move up, we could see a better upside movement in pound. At the same time, the downside would be limited. So on this basis we recommend a buy in pound at current levels with a target of 67.40. In terms of Japanese yen, we have witnessed some bearish run for the Japanese yen against the US dollar, which came in obviously as much of a relief for the Japanese economy, which was struggling to support its exporters. But today in the morning, in the Bank of Japan's policy review or the meeting, we had the Bank of Japan double its size of easing. Also, what is worth noting is that the Bank of Japan has also announced a new scheme which is similar to the US quantitative easing, wherein it has promised to give unlimited loans, unlimited funds to different sources at lower rates for the longer run. So this could also act as supportive for the Japanese yen, especially against the Indian rupee. So as a result of this Bank of Japan policy, we witnessed a rally of more than 1% from the lows in the Japanese yen versus the Indian rupee. So at current levels, we recommend a buy with a strict stop loss at 67.50 and a target of around 69.